Michael Burry dark secret. It's going to get worse. December market crash plan exposed. Usually an investor's biggest fear is a stock market crash, as savings can be cut in half or more. So when an investor like Michael Burry compares stock markets of today to the dot-com crash, it pays to take notice. Michael Burry was made famous in The Big Short. The film documented his call to short the housing market heading into the financial crisis. Today we're going to talk all about what warning Michael Burry just gave about the upcoming market crash. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. The chances for a stock market crash have to be viewed in the context of the pandemic. When COVID first started to spread, ensuing lockdowns caused a lot of economic damage. Stock markets then fell as share prices had to reflect the prospect for lower profits. We've seen a huge rebound in economic growth since then, and stock markets have rallied accordingly, particularly in the US where Michael Burry is based. But stock markets rebounded at speed. The S&P 500 is now up over 100% since the low in March 2020. There was good reason for the stock market to rally. Central banks such as the Federal Reserve slashed interest rates to all-time lows. The Fed also started quantitative easing, buying bonds to keep interest rates low and encourage lending. This floods the financial markets with liquidity and reduces borrowing costs. Stimulus like this normally reverses a stock market crash, just like in 2020. Governments also helped with fiscal stimulus or spending to support their economics. In the UK, we had the furlough scheme to support jobs. In the US, there were checks sent directly to consumers' bank accounts. Because of lockdowns, there were limited places to spend this money, so savings rates increased. Some commentators have said excess savings and financial liquidity have created greater demand for cryptocurrencies and NFTs. But Michael Burry has a rather stark warning for today's markets. More speculation than the 1920s, more overvaluation than the 1990s, more economic strife than the 1970s. Wow, if this is the case, then we're about to see an almighty stock market crash. Stock market crash. Is there one coming? I want to separate out the UK and the US stock markets. I agree with Burry to an extent on overvaluation in the US. The price-to-earnings ratio for the S&P 500 is high at almost 26. But the FTSE 100 index is far cheaper, at a PE of 17. The FTSE 100 also hasn't fully recovered from the stock market crash of 2020. This doesn't say to me that the UK market is full of speculation. My biggest concern, which aligns with Burry's comments on economic strife, is rising inflation. The current Consumer Price Index, CPI, reading in the US was a huge 6.2% in October. The Bank of England is forecasting CPI at 5% early next year. Inflation really impacts lower-income households the most. Then central banks may be forced to reverse economic stimulus quicker than expected. This may lead to a stock market crash. Brian Belsky, BMO Capital Markets' top investment strategist, went on CNBC in March 2020 and predicted there would be an epic move to the upside in US stocks, like something we've never seen before. He was right then, and now he's back with Wall Street's most bullish forecast for US stocks, predicting earlier this month that the S&P 500 can rally more than 13% to 5,300 by the end of 2022. At the root of Belsky's bullishness is his belief that company earnings will stay strong, central banks will remain supportive, and that inflation and supply chain problems should cool. I believe that next year is going to be another good year because I think people are too focused on inflation. They're too focused on the negative, he told Insider this week. The fundamental construct of the United States stock market is in wonderful condition. We have the best equity assets in the world, period. Belsky was dismissive of market bears such as legendary investor Jeremy Grantham and Michael Burry of The Big Short fame, who are well known for warnings that stocks are heroically overpriced and that a crash is coming. There are many Chicken Little strategists out there, he said, referring to the folktale character who warns the sky is falling. Many of them have had the same call for 3 years, he said, during which time equities have soared and they've missed the entire move. Fed tightening shouldn't hurt stocks. Belsky and his colleagues brushed off concerns that stocks will suffer as the Federal Reserve tightens monetary policy. as they laid out the reasoning behind their bullish forecasts in a note earlier in November. The Fed has already announced that it will trim its bond purchases by $15 billion a month in response to strong inflation, which is at a 31-year high. But Belsky and Co. wrote, the size of the Fed's balance sheet will remain very large for quite some time, which should continue to be supportive of stocks. Even if the U.S. central bank hikes interest rates in the middle of next year as expected, equities should still stay solid, they said. Belsky acknowledged that U.S. stocks have historically struggled in the 3 months following the first in a cycle of interest rate rises from the Fed, with the S&P 500 falling 1.9% on average. However, the index has done fairly well thereafter, gaining 7.5% on average in the subsequent 12 months, he noted. Inflation will cool and earnings will stay solid. In any case, Belsky thinks jitters about inflation should cool next year as supply chain kinks get ironed out. BMO expects the U.S. Consumer Price Index to fall from the 6.2% year-on-year rise in October to an increase of 2.4% by the end of 2022. More importantly, Belsky believes corporate earnings will continue to drive stocks higher. Although earnings growth is set to slow, it's still growth, he said. The strategist expects S&P 500 earnings per share to increase 17% by the close of next year. Belsky and his BMO colleagues think that given the stellar recent performance of stocks, they're bound to hit some volatility at some point, before resuming their march higher. But they said that trying to time the market is very difficult, and that a stay-invested strategy is the best bet. Robert Kiyosaki also tweeted in June that he was expecting the greatest market crash ever. Biggest bubble in world history getting bigger, the personal finance guru and author of Rich Dad Poor Dad said, biggest crash in world history coming. Kiyosaki has accused the Federal Reserve of overstimulating markets and devaluing the dollar. He's advised investors to prepare for the downturn by stocking up on precious metals and cryptocurrencies. Are you ready? He tweeted in April. Boom, bust, mania, crash, depression. Mania in markets today. Prepare for biggest crash, depression in world history. What will Fed do? Print more money? Save more gold, silver, Bitcoin? Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye.